He's keeping an overweight rating on Oracle shares and a price target of $35. Evercore Partners analyst Kirk Materne is here on the InsideTrack. Kirk, good morning to you.
Good morning.
So, an improvement, shall we say, from the December quarter. You call it back to basics. Another analyst calls it decent, but I think what did he say? Decent, but unexciting. You know, two questions. Is December behind us? Has Oracle kind of got back on the execution train? And is it enough to excite shareholders? Is it reason enough to want to own this stock?
Right. I think in terms of is it enough to get past December, I think yes. I think what they said in December was there were sales execution issues. I think the sequential growth you saw in this quarter sort of proved that out. I think in terms of exciting investors, I think you're on the track back to getting investors excited. When you look at Oracle, you're talking about a company trading at only 11 times earnings for a company that's grown earnings at 15-20% annually in good and bad markets. So having consistent execution is really key. Having, as you mentioned earlier, the hardware business also get back to growth in fiscal 13, I think is something that will be key in terms of the multiple to expand, you know, really back to levels really only where IBM's trading. So if you just apply IBM's 12.5 times multiple to Oracle, you're at a $34 stock. So I don't think a ton has to happen for investors to get back excited about Oracle again, but comps will ease next year, hardware has to get better. You know, those are sort of the two key things.
So you're not concerned about a 16% drop in hardware product sales?
Well, I'm concerned about the absolute number, obviously, and the fact that it was a little bit lower than where they guided. I think what's going on with Oracle, though, is you have really two parts of the hardware business. You have the Exa product lines, which are growing nicely. They talked about triple-digit growth last quarter. But you're also cycling out the lower-margin Sun products, which is really purposeful, right? They're trying to not only grow hardware, but grow it on a profitable basis, whereas Sun obviously had their own issues from a profit standpoint. So I think as you cycle out the remainder of the Sun product lines or the lower margin Sun product lines over the end of this fiscal year, as you get into fiscal 13, you not only see hardware getting back to growth, but you see expanding profit margins in the hardware business. And that's really, I think, what Oracle's after.
Looking ahead, Larry Ellison, of course, king of acquisitions. What kind of product or area does he need to expand into? What kind of companies out there are ripe for his acquisitive eye?
Right. There's a lot of targets for Oracle, given how big the company is. I think last night, if you listened to the calls, storage is an area where they seem to be spending more time. Yeah, the thing to keep in mind with Oracle is they rarely acquire outside of areas they're already playing in, right? So they sort of have this try before you buy mentality to a certain degree. So I think what I'd be looking for is where are they starting to spend a little bit more time focusing on. You know, they talked a lot about the Sun ZFS product last night in terms of storage, the Pillar acquisition, storage. You know, so I think that's one area to keep in mind. It's big enough for them to go in and move the needle for them as well.
Ellison started the call off by bashing companies like Salesforce.com, SAP. Do you think he's more worried about the cloud than he's letting on?
I think Oracle has its eye on the cloud. I mean, keep in mind, Larry's a big stakeholder in NetSuite as well. So I think the idea that Oracle has sort of let the cloud, you know, pass them by, or they've totally missed this wave, is a little bit overplayed. Clearly, Fusion apps will go GA across not only their HCM product, but CRM, ERP this quarter. So I think they need to see some improvement in that area. I think you're starting to see that already. So I think Larry talking negatively about his competitors isn't something real new on a given quarter, but I do think they do have their eye on, not as much only on SAP, but even making sure companies like Workday, you know, don't sort of build up the ecosystem that CRM has. You know, they sort of left CRM alone. CRM got pretty big. They built an ecosystem. They have a bit of a moat around their business. I think it'll be, you know, they have their eye on it.
Is the Ellison factor, Kirk, an overhang on Oracle's valuation? Is it one of the reasons, perhaps, that Oracle is, as you pointed out, trading at a multiple discount to IBM?
No, I don't think that. I think people view Larry as an incredibly strategic CEO. He, I think, was one of the first to view M&A as something that is possible within technology before they bought PeopleSoft. People used to say M&A just doesn't work, and I think what he said is, listen, you know, acquiring customers through M&A and then sort of getting leverage through those deals is possible, and you've seen the earnings growth from that. So I don't think he's you know, execution's the biggest thing. That's execution and the negative hardware growth are the two things I think compressing the multiple.
What can we extrapolate from Oracle's results for the rest of the tech sector as companies get ready to report beginning next month?
I think you look at enterprise IT spending is very stable right now. I think we had a report out earlier this week talking about open sales positions in software have gone up a lot, meaning people are hiring new salespeople, which is a good indication in terms of you don't hire a new salesperson if there's not latent demand out there. So I think you can read through to Oracle that nothing's really changed since we've heard from SAP or IBM in a major way back in January.
Kirk, one quick question before we get to some financial markets, what's happening right now. The dividend, Apple sort of, I won't say blazing the trail for other companies because they were there before Apple, but raising its dividend to a yield of something like 1.8%. Oracle's dividend lower than that. Is that going to be a catalyst for companies like Oracle to step it up? Oracle has, what, $30 billion of cash and short-term investments as well.
Right. I think Oracle's taken a pretty balanced approach to delivering cash back to shareholders in terms of buybacks and dividends. I think raising the dividend is something they will consider, and I think you'll see them. They've had a history of raising it modestly. I guess the question, given the interest rate environment, if the stock does remain sort of stuck in this $30 level, do they have more incentive to raise it, given that you've seen companies like CA have raised dividend, the stock immediately reacted. So as long as this interest rate environment remains very low, I think you'll see more investors saying, hey, why don't you just raise your yield up to a level where we can not only have some upside on the stock, but also get a decent yield in the near term.
Something tantalizing, perhaps, for those shareholders to look forward to. Kirk, thanks very much for being here. Kirk Materne, analyst at Evercore Partners, talking to us about Oracle.